Hello friends and welcome back to my channel. In today's session, we'll dive into how we successfully traded on 18th October and more importantly, why did I anticipate a move down to minimum 4350s in ES which ultimately resulted in a 117 point trade with active runners. Well, it's all about the balance ranges that we've been tracking and the application of balance rules combined allowed us to capture the current leg down. The next 10 minutes will be insightful and one that will show you that the edge lies in how you read the development. Without further ado, let's get to it. First, real quick, let's establish the foundation around the balance rule theory, and that should help you better understand how we navigated and also set you up the next time we observe a failed balance breakout or breakdown or any of the three outcomes highlighted on the screen, which we will discuss shortly. So what I've done here, guys, is that on a blank chart, I'm first going to explain you how the balance rules work and how is it you may want to think when it pertains to the balance rules and ranges. As you can see, this rectangular box in blue is a hypothetical range that I have drawn up. Now, in theory, market rotates to the either end of the balance with halfback being the decision-making point during the rotation. So typically, you want to think the top being resistance, which is where you don't want to go long into the balance top, and the bottom being support, where you do not go short into the balance bottom. So outside of these rotations, we have got three possible outcomes to learn. That applies both during a breakout or a breakdown. Now, the first one being, the outcome one being a look above and fail. This typically happens during the same session and often within the 10-15 point range. Number two is a breakout failure. This occurs when the index has closed outside of the balance on a daily basis or a daily time frame, or a failure has occurred around the 50% balance extension accompanied by a swift move back inside the balance. Now this is where you want to think about back inside the balance, which means it's all about the rotation to the halfback where the decision is made either to go back up or continue lower. The third is breakout and go. These often are high tempo moves which based on strength may backtest, or you may also witness one-time framing up on an intraday basis. Of course, once you are able to put the context and MGI, market generated information, with the balance ranges and rules, you will even have a pulse on which of the above three discussed outcomes are potentially at play. Guys, I just did not draw to the downside, but it will be the same action mirroring to the downside. Now that you have a fair idea of what the balance rules are, let's walk you through the session of 18th October. I'll keep it simple with three reasons that enabled us to pull the trigger right at the RTH open. ES had the second failed attempt to break above the balance 43.72, 44.80. Observe, each time buyers looked above, they failed to find traction, and what followed was a high tempo rejection or a swift move down that resulted in intraday one-time framing down. The behavior was the same on Thursday and Tuesday. Let's bring in the balance rules here. What do they suggest? A move back down to the balance halfback. So as you can see, a look above, swift move down, right into halfback, found support, lower high, flushes down to the bottom. Similarly, on the 17th, that is what we see happened. Only a late day spike, not a spike, a late day move up got ES back above the balance. So a balance halfback. The second reason that enabled the shorts is Tuesday's initial balance high at 43.99. Sorry, at 43.94. Now that put a lid on ES during the London session. Once ES came online during RTH, based on our intermarket confluence analysis, DAX was weak by being below its initial balance low at US Open. So as you can see, the first reason we had was your standard balance rules and rotation. The second is how Tuesday's IBH as well as the halfback both literally capped the London sessions high, confirming sellers taking control. Add to the fact that DAX was also below its IB, their story was becoming very clear that shorts were in motion, or rather sellers were taking control. Next up, at base level, we know for a fact ES looked above for traction at least twice, which meant we can expect a similar action at the other end as well. That is, a look below and see if there's enough buyer interest again. So you may want to think in terms of refueling, right? If buyers are able to refuel, if not, it is likely sellers will take control, and that's precisely what happened on the 18th. Now, not only are these reasons that got us to short with such high confidence at the open, but also we look at something called magnets. That is, what are the potential magnets for the index on either side of the balance? So in this case, to the upside, we know the only magnet is 4,446 gap. However, if you look at the downside, we've got the Globex gap from Sunday at 43.50s. And second, as pointed out in my earlier video released on 15th October, 43.02 and 43.05 was pending a retest, since it was a London breakout with no RTH backtest. The third reason are the single prints left behind from 6th October, and lastly the poor low at 42.51. Now that's plenty of magnets down under. So acceptance seen below the balance and below the balance bottom, and it's then pretty much an easy short. So with the combination of these factors, we were able to not only anticipate a short, but also hold it with confidence, with conviction throughout. Now that you have the balance rules in full effect at the open, whereby ES held below the balance halfback, post that sharp look above and fail of Tuesday's value area high, value area low right here. Let's also bring in the intermarket confluence that was present with DAX being below its initial balance low. That was a recipe for a clear move down. All we had to do was observe for validation at each leg, that is at 43.66.69, which is my weekly balance zone, and then 43.37.40, and manage our trade without letting our conviction get influenced by outside factors. Now, if you look at my post right here, 45 minutes before the open, I was very clear. Overnight resulted in a rotation back lower. Usually what we then witness is an equal magnitude of look below. That would put ES back down at 43.50's minimum. The key word is minimum. So I'm not at all saying there isn't more. I'm just saying this is the bare minimum we can go down to, right? And here's our results. We shorted. Again, I had kept some runners towards the end of day, 10% runners, just because our man was speaking. And there you see we had a really nice flush lower, allowing us to capture a triple-digit trade. So guys, to successfully trade the balance, you need to account for at least 4 factors. 1, where are the magnets outside of the balance? What's the behavior within the balance? Third, have the right balance range, right? Fourth, the thought process, something I talk about in every video of mine. In my room, our topmost focus is on how to decode the market action. It's definitely not a traditional approach, but I'm sure you folks have realized by watching my videos over the last couple of days, weeks, and maybe within time will definitely realize that the true edge lies in how you decode and how you think. If you're eager to access my Discord community where I delve into my thought processes, share daily plans, issue real-time trade calls, and provide educational content, just click on the description box below to learn more. To kickstart your journey, use the code LEVELUP to enjoy an exclusive 20% discount on your first month. Also, don't forget to subscribe for my free weekly plan on Substack, as that piece of art literally lays the foundation for my team and me, enabling us to make real-time decisions based on the insights dropped in on every Sunday, setting us up for the upcoming week. Until then, folks, EdgebyRS signing off. Have a good weekend. Cheers.